Good afternoon, everyone. Uh, I'd like to welcome everybody, all of our clients, our guests, friends of the firm, on behalf of the partners. We're glad that you can join us today. I'd like to introduce myself. My name is Dean Martin. I'm a partner here at Kushner LeGrace, and we're happy you could join us today, as we continue our discussion on the loan forgiveness process of the PPP program. It's going to be a good time for us to talk about some new details that we now have. Probably for us to update a previous webinar we already did that was of the loan process. We did that webinar on April 29th, and we'd hoped to be doing this webinar a bit sooner, but we really had not gotten much substantially from the SBA in regards to guidance since then. But now that we have the application and the instructions, there's a wealth of information that we now have. We will get more, just like the loan application itself. The first thing to come out is going to be the application. And then after that, we expect that we'll get some FAQs updated by the SBA, as well as some additional regulations. So we'll talk about what we know now, and then also, what we expect to come, hopefully in the near future. The first thing we're going to start out with is just a general review of the application itself, as well as the instructions. That's going to be the bulk of our dispatch. We're going to go ahead and a revised, redlined version of our previous sheets, which kind of listed as far as different questions, that are common for applicants on the loan forgiveness side. As we do that, first of all, I'm going to mention a lot of the uncertainties that were answered as I go through the application, but then I'll also mention the things that are still unclear. I will also bring up some items that, are now additional questions that we have after the review of the application. And then I will also talk about some things that could be down the line legislatively as far as changes to the PPP program. The next thing we're going to talk about after that is we've got an update to our previous best practices. We called it a cheat sheet that kind of gave our recommendations for you to implement as you go through the forgiveness process. So we've got a supplement to that, with some additional considerations for you, now that we do have the application and the instructions. Finally, the last part of our presentation today, we will have a Q&A session, and you should now be able to use the chat window of MS Teams to submit your questions. I know we had some technical difficulties in our first webinar, but we should have that fixed. And, we'll try to get to as many questions as we can. If we cannot get to your question, please just go ahead and submit that to us, and I will get you an answer, in a timely fashion. Should be either today or tomorrow. So without further ado, let's go ahead and get into the first part of our presentation, which is going to be the loan application and the instructions. And if you're following along in MS Teams, I'm going to go ahead and split my screen right now. So you can see on the left, I'm going to be toggling through the application itself. On the right, I'm going to bring up the instructions that pertain to the particular form that I am speaking about. So on the left, here's the application, first page. You've got some informational things up top. The first thing I want to point out is you do have to check a box right here if your business, combined with all of its affiliates, received a PPP loan in excess of $2 million. And one of the pieces of guidance that did come out since our last seminar is the SBA is going to consider loans under $2 million to have adequate certification that the borrower needed the PPP funds due to the economic certainty of COVID-19 to continue its operations, and you keep on paying its employees and things like that. So if you're under $2 million, and remember that's combined with your affiliates, you would not check that box. You're presumed to, meet that certification. Now, if you're over $2 million, you do have to check the box. The first thing that means is you're not automatically presumed to meet that certification. And the second thing it means is that the SBA will automatically review your forgiveness application. And we'll talk about, considerations for that once we get to our best practices cheat sheet. But I just wanted to point that out, since it is now on the first page of that application. The second thing you'll see on here is you do have to pick the frequency that you make your payroll, whether that be weekly, bi-weekly, twice a month, monthly, or other. And the reason why they're asking for this is a new item that was brought about in the instructions and the application, and that is that you now could possibly have two different covered periods. The first covered period is what we were expecting. So the first covered period is the 8-week period that starts on the date you received your PPP, that the loan was originated, if there was a lag in the number of days, and it could seem insignificant. We're just talking about a day or two, but it's very important that you start your covered period with the date you received your PPP loan. That's going to be the start of your 8-week forgiveness window on the covered period. And in the application, the instructions, what they've now done, just to try to make things administratively easier for some applicants, is they've added a second covered period. And this is just going to be for payroll items exclusively. You have the option only if you are a weekly or bi-weekly payroll payer to use the alternative period to do your payroll items. And the date that your alternative period is going to start is the next payroll cycle, the first day of the next payroll cycle after you receive your PPP loan. So, and if you're weekly or bi-weekly, what that means is that if you start your covered period on that date, the end of your period is going to coincide with the end of a payroll cycle. So you won't have to split payroll at all. You would just have to pretty much use your normal payroll cycles when you're looking at your forgiveness options that you have on payroll. That may or may not be the best thing for you. We'll get to that. But if you're a bi-weekly or weekly filer, that is an option that you have. So that's what I wanted to point out first on the application. And then we're going to get to the actual calculation of the numbers and computing your forgiveness amount. And the first thing I want to get into on that is, and this is a big issue that's come out, some new information that we have. Unfortunately, it's not all that clear, but we want to talk about the paid or incurred issue. And if you remember from our first webinar, in order for an expense to count towards forgiveness, per the bill, per all the guidance that had been issued, it said that expense needed to be paid and incurred. And with this new application that's come out, they've altered that a bit. So instead of using paid and incurred on the expenses, the language has shifted. It's now become paid or incurred, or another phrase they've used, which may mean the exact same thing, is payroll paid and payroll incurred. So if you look on the right of your screen, page 10, this is where we're getting into that. So item 1 down here, for eligible payroll costs, it says that forgiveness is eligible for payroll costs paid and payroll costs incurred during the 8-week window. Your payroll cost paid is going to be considered paid on the date that you distributed the checks or initiated an ACH transaction. Your payroll costs are going to be considered incurred on the date that the wages are earned. So what you may have too, and they're allowing for, is payroll that is earned, it's incurred at the end of your 8-week window and paid later. And we thought, are we going to have to do cutoff payroll to make sure that those wages are all paid in the forgiveness window? And the SBA is providing a little bit of relief on that front. So they're saying that if you have wages that are incurred and then paid later, if they were incurred during the 8-week window and paid outside of it, you can count them as long as they're paid on your next regular payroll date. So that may make life a lot easier for people that were worried about having to do cutoff payroll periods. One thing that you do have to check, though, is you don't have to do a cutoff on the end of the 8-week window, but you should make sure that your payroll, all payroll earned as of the last date of your payroll window is paid out on your very next payroll date. Now that may occur in the natural cycle of your payroll. If it does, great. If not, then you may need to maybe just tweak the payroll cycle of that next payroll period to make sure you're paying out all those wages. And that they're using a similar definition for your other costs too. So bullet point 2, in which we're getting into mortgage interest, rent, utilities, your other costs. So as far as the paid and incurred issue on those, I've got it highlighted at the bottom. It says that a non-payroll cost must be paid or incurred during the covered period. And same deal, if it's incurred at the end of the covered period, you don't have to pay it on that last date. All you have to do is pay it on the next due date of that particular bill. So you just pay your mortgage obligation on the next due date of the payment. You pay your utility bill by the due date, and that allows you to use those expenses, even though you may not have paid them directly in that 8-week window. So we're pretty clear on those costs that are occurring at the end of the window. What's unclear still in this language, and you can read a lot of different experts and national authors or speakers, and there's still some uncertainty on the expenses on the front end of that window. So you may have, and I know a lot of clients do, have a payroll cycle that was paid on the very next day or so after they received their loan. You could have the same with other costs too. You paid it at the very beginning of your 8-week window, but it was really for expenses that were incurred before then. We would like to see, and I expect to see, more guidance from the SBA on that front, because it changes the math drastically if you're able to use those expenses in the forgiveness period. That's going to extend the forgiveness almost past the 8 weeks that was intended in the bill. The SBA may be intending to do that, or they may not. That's something I certainly expect to see addressed as soon as FAQs are issued on this. So the good news that we know, you don't have to worry about doing a cutoff at the end of your 8-week window, but we have to wait and see whether we're going to be able to count anything that was maybe incurred before and then paid during the 8-week forgiveness window. So That's the paid or incurred issue. And now I want to dive into line one, now that we have that out of the way, which is still going to be the bulk of your forgiveness calculation. It's going to be where most of your time is spent as well, and that's going to be your payroll costs. So summarizing your payroll costs. And I've changed the order of these PDF pages. If you downloaded the PDF issued by SBA, just to make these flow easier into how we're going to talk about them. So I'm going to go to page 3, and that's going to be your detailed Schedule A worksheet. And this is where you're going to start if you're going to go about adding up your payroll costs. So with this worksheet, first thing I want to mention is you're only going to list true employees, not owners, on this worksheet. I know if you have a corporation, an owner can also be an employee. If that's the case, we're going to account for them later. You don't put them on this sheet. So you're only looking at non-owner employees, and you're going to separate those into 2 categories. The first one on table 1 are employees who in 2019, this is what we discussed in the last webinar, that did not earn wages in excess of $100,000 as prorated in any pay period in 2019. So you take $100K annually, prorate down that to your payroll cycle, and if they're less than that in every pay period in 2019, they go on table 1. If in any pay period they earned more than that, they go in table 2. And you can see here that the data that you input into these tables is pretty much the same. You can have the name, identifier, which is, I think, last 4 digits of your social, the compensation that they earned, either depending on what you choose in the covered period or the alternative covered period, and then the average full-time equivalents for that employee, and then finally the salary or hourly reduction, which only applies to table 1. So I'm going to start our discussion here with the FTE calculation, because that's the one you're going to do for all employees that you list here, regardless of whether they're in table 1 or table 2. So the news we have on that is that when we're doing this full-time equivalent calculation, first of all, it's going to be done at a per employee level on the period. And you're going to use a 40-hour per week base when you're doing that calculation. So for each employee during the period, you look at the number of hours that they were paid during the period, and you do that average per week. If that particular employee worked 40 hours or more on average during the relevant period, they get an FTE of 1. If the employee earned less, and then that's good. That's the highest you can have is 1. And for this worksheet, during your forgiveness period, you want to have as many 1s there as possible to have the highest amount of FTEs possible. So first of all, if they worked average of 40 hours or more, if they were paid average of 40 or more, they get a 1. If they were paid less than 40 hours, they could still get a 1 if they meet 1 of 4 categories. And I'm going to list those now, but if you need to refer back to them, it's right here on page 12 of the instructions. The first category is going to be anyone that was laid off during the covered period, and then you made a good faith written offer to rehire them before the end of your 8-week period. So, and that doesn't mean that you had to rehire them, but you do have to have made a good faith offer to rehire that they refused. If that happens, then they get a 1, they're a full FTE. Also, if anyone voluntarily resigned, if they were fired for cause, or they voluntarily asked to work reduced hours, and they did work reduced hours pretty much because they chose to, then they will also get a full FTE. And in all of these circumstances, you want to make sure that you keep written documentation. I know if you look at the instructions, it says only option one must be written. But if you look at the items that you're supposed to retain per the instructions, pretty much all of these instances should be documented in some form or fashion. So that's the first thing you do if you have someone that has worked less than, or was paid less than 40 hours. You see if they meet one of those four categories. If they do, great, they get a 1. If not, then they're going to get a fraction of 1. And you have two options for that. The first one is the simplified option, and that pretty much says anyone who was paid less than 40 hours on average gets a 0.5. They're half of an FTE. And that's going to be the easier one to do. It may not be the best one for you to do. The other option that you can use is you pretty much take their average paid weekly hours, divide by 40, and round to the nearest tenth. So I've got a quick illustration here of how that would work. Here's my table 1 employees up top, table 2 employees on the bottom. And over to the right, I've got their average weekly hours paid per week. And I'll look at employee 1. He averaged 37.23 hours a week, which if I divide by 40 is a 0.931. So under option 1, the round to the nearest 10th option, he's 0.9 of an FTE. Or if we use the simplified approach, he's a 0.5. So you're going to do that for every employee that you have, and you're going to tally them up. And you'll see at the bottom, this is going to lead to different results. Under option A in this example, we've got 8.4 FTEs. Under option B, you've got 7.5. And which one is going to work out best for you is you're really going to have to run the numbers to test that out. And remember that whichever option you use here, you must use in all instances where you calculate FTEs. So it's not necessarily that the higher one is going to be better, because if I use the FTE option here during the covered period, I also must use that during any kind of base periods that we do. And there are several different instances where you calculate FTEs. So I think it's certainly, if FTEs are an issue for you, you're going to want to probably calculate them both, unless you get full forgiveness in any one of the options, then great. You don't really have to look at it any further. So that's the calculation of the FTEs. And then if you look at the bottom here, there's a safe harbor where if you can meet this, then you are not going to get any reduction due to employee count, even if you did go down. And the safe harbor that's listed here looks very, very similar to what we were expecting, per the terms of the bill and when we did our last update. And in order to meet that safe harbor, first you had to have a reduction in your FTE count during the period of February 15th through April 26th as compared to February 15th. So if you did go down in FTEs during, from February 15th to April 26th, that's the first thing you must have in order to get the safe harbor. The second thing you must do to meet the safe harbor is by June 30th, go back up to where you were at February 15th. If you fall into both of those categories, then you meet the safe harbor. You're not going to have any forgiveness reduction due to FTEs at all. So that's the next thing you want to test on the FTE front after you figure out everyone's FTEs for your covered period. So we talked about almost everything on this sheet. The last thing we need to talk about is to the right here in table 1, and that's the salary or hourly reduction component of the calculation. And we talked about this also in our last webinar. The new piece of information that we have, and this is an applicant-friendly provision, is that the way the SBA is going to prescribe this calculation to be done when you look to see if a person's salary was cut is you look at their average hourly wage or salary. So, and that's different than if you were to look at the total compensation that we were paid. For instance, if you had an hourly worker and your business was impacted and you had to cut their hours, but you kept their same the pay rate the same per hour, per the way that this is prescribed, that is not a salary reduction. So that should not harm you as long as you kept their average pay rate the same. And there's a difference mechanically on how the calculation works, whether a person was a salaried worker or an hourly worker. So if you look on the right of my screen, this is page 11 of the instructions. I thought the best way to really illustrate how this works is to actually run through the numbers in both instances. So this is how the calculation would work. I've done an hourly worker and I've kept it in increments of 10, so it's easier to see how the math is working. In one instance, an hourly worker who's making $10 an hour before, in Q1 of 2020, and then a salaried worker who is making $100,000 a year in Q1 of 2020, and I've cut their compensation in both instances to about 60%. So our $10 an hour worker is now making $6 an hour. I'm aware that's below the minimum wage, but again, I'm just trying to do this so that the math is easy and it illustrates how the calculation works. In the second instance, our salaried worker is going from 100K a year to 60K a year. So the first thing you do, step 1, is test, look at the compensation in Q1 of 2020 compared to what it was during your covered period, the average compensation, and see if it's less by more than 75%. So in this instance, yes, it was cut by more than 75%. It was cut by 60%. So I need to move on to step 2 now, and that's to see if, yes, even though I did cut this person's average compensation by more than 75%, do I meet a safe harbor? If I meet the safe harbor, then I don't need to reduce my forgiveness even though I did cut it. And the safe harbor is kind of going to be similar to the way it works on the FTE count as far as the steps. So first step that you need to have to qualify for the safe harbor is there does need to be a reduction in their compensation from February 15th as compared to what it averaged from February 15th to April 26th. If there was a reduction, then the next thing you need to do to meet that test is to restore that workers' compensation rate by June 30th. And remember, we're talking about the rate. This is another favorable interpretation. You don't have to make up for all of the compensation that was reduced during the period. You just have to pretty much restore the pay rate. So for instance, our $10 an hour worker who was cut to $6 an hour in order to get the safe harbor, their pay as of June 30th for wages earned, as of on that day and in the future would need to be just restored to $10 an hour again. So if you meet the safe harbor step 2, that's great. Stop there. You don't need to test for any other kind of reduction. If you don't meet the safe harbor, then you have to proceed to step 3, and that is to calculate the amount that you must reduce your forgiveness by. In order to do that, you pretty much take 75% of their Q1 compensation, and you subtract from that what their average compensation was in the covered period. So for instance, here, our $10 an hour, 75% would be 7.5. Then subtract what our average rate was, which was $6 an hour, and then you get a deficit, either on a per hour basis or on a salaried basis. And then you pretty much prorate that deficit over, what the lost compensation was over the 8-week period. If they're an hourly worker, you prorate that over the average hours they worked in Q1 2020 and multiply it by 8. If they're a salaried worker, you prorate that to be 8 weeks worth of salary. So again, I've illustrated this in the instructions. So if this is something that's going to affect you, I would say refer to this starting on page 11, and you'll see mechanically how it works for both a salaried worker and an hourly worker. So that's the last piece of information that you needed to do in order to complete Schedule A worksheet. And again, that's really dealing with the compensation and FTEs of your employees. And once you have that, then ready to consider your other payroll costs. And that's going to be on Schedule A. I'm on page 5 now. So page number 5, Schedule A, you're going to have all the stuff you calculated before. Your employee compensation for both classes of employees, the FTEs, the salary reductions and things like that. And now we're going to get into the owner compensation. That's going to be on line 9. Line 9, and one thing we're seeing with this application is it looks like they're really trying to treat pretty much all business owners similarly on the owner compensation, certainly. And that's going to be your self-employed individuals, your partners in a partnership, or your owner employees of a corporation. Any owner, you treat them the same as far as the cap goes. You can't have forgivable compensation of greater than $15,385, which is $100K a year, prorated over 8 weeks. You can't have compensation greater than that. But then another wrinkle that's been added is you have to take the lesser of that number or their 8-week compensation from 2019. So what that is going to prevent is an owner, let's say, who maybe had compensation of $50,000 in 2019, then increasing their compensation during the 8-week period to be in excess of that amount and getting more forgiveness. So your 2019 compensation for the owner is the first limiting factor. You can't be greater than that. And then after that, you have to look at what they actually were paid during the forgiveness window. And it looks like even for a self-employed individual who's, they really don't have, they are the business, I would still recommend pay yourself physically from the PPP loan proceeds. Again, it looks like they're really intending to treat all owners the same as far as that piece works. But that's your owner comp. And then after that, after you've calculated all that, that, the next thing I would do is skip up to line 6, and that's to account for your other payroll costs that aren't necessarily compensation. So it's going to be employee health insurance, retirement plans, and state and local taxes. The one thing I want to point out on this front is if you look at lines 6 through 8, they have really mentioned that your contributions or expenses are what are for employees. Now that's another item that's subject to interpretation, and we need more guidance on, because what we don't know is what does this mean about employer and the owner's health insurance or the owner's retirement plans. If you are a partner or a self-employed person, you are not an employee. If you are owner of a corporation, you own stock, you do pay yourself a wage, you're also an employee. So we're not sure, and I've seen different opinions on whether or not any owner's health insurance or retirement plan contributions at all would be added to these. So that's another item I do expect to be clarified in future FAQs. In addition to the paid or incurred issue that we talked about earlier. And then the other thing I wanted to mention on this is, your covered period for these are going to be the same period that you look at for your payroll costs. So if you chose the regular covered period, you're going to use that when you're adding up all these costs. If you chose the alternate payroll period, you're going to use that. And that's the extent of your payroll costs. So line 10 right here, you add up all of your wages, all of your owner compensation, all of your non-payroll costs, and that's going to be kind of your base for your payroll. The last part of Schedule A is to do the FTE calculation. This is what you're going to use if you did not qualify for the safe harbor. And this is going to look similar to what we discussed previously. The first thing you're going to do is calculate your average FTEs during the base, which that's what we did in Schedule A, our Schedule A worksheet. Here's our base period average FTEs during the covered period. And then you compare that to either, whichever works better for you, your average FTEs during February 15th through June 30th of 2019, or the first 2 months of 2020. And if it's less, then your forgiveness is going to get reduced. You enter the numerator to be your covered period FTEs, and then the denominator to be your base period average FTEs. And that's the last piece of completing your Schedule A worksheet. Once you do that, you have summarized all of your payroll costs, and you're ready to move on to the other parts of the forgiveness form. So now I'm going to flip back to page 2 for that. So everything that we just spoke about was just mainly to see what we need to put into line 1 for our payroll costs. The next thing that we get to add now are the other costs, which are going to be our mortgage, rent, utility payments, and all of that. And for these, you're always going to use the covered period. You're never going to calculate these over the alternative payroll period, even if you chose to use that for your payroll. So you're always going to start your forgiveness window on these on the date that you receive your PPP funds. Other than that, we didn't get a whole lot of additional guidance on what these costs are. It's pretty much the same definition as, when we last spoke. The one thing we did get is, if you see here, the business rent, it's business rent or lease payments, and either a lease of real property or personal property would qualify. That's an applicant-friendly clarification there. So if your business leases automobiles, if your business leases equipment, then those lease payments are going to qualify under the rent category. So that's, that's, like I said, that's a good development there. So after you add up all those costs, then you've got the extent of everything that you have that is going to qualify for forgiveness potentially. And then you apply the FTE limit if it does apply that we discussed earlier. You're going to multiply your total costs eligible for forgiveness by that percentage to see what the reduction would be, or you reduced forgiveness. And then once you've done that, you're ready to just apply the final limits to the potential forgiveness. So first, you can't have forgiveness in excess of your total loan amount. And then also, you can't, your payroll costs must be at least 75% of your forgiveness amount. If they're not, then you have to reduce your forgiveness so that they are. And when I say total payroll costs, I mean the cost right here. It's going to be line 1. Line 1 cannot be less than 75% of your total forgiveness amount, at least with the way the instructions are now. We'll get to how that could change as we move on into the other parts of the presentation. So those are the final limits, and then that's going to get you finally to your line 11 forgiveness amount. The last thing that it could happen potentially, you see up here, they are asking for an idle advance amount, an application number. This is going to be if you did apply for an idle, you were able to get an advance of up to $10,000 on that. That advance is going to be reduced from your final forgiveness amount as well. So that's once you finish that, then all right, this is the amount of forgiveness that I can receive. As far as the other parts of the application, I'm going to briefly mention. I'm on page 6. You've got some certifications here that you need to attest to. I'm not going to get into all these in detail. I do want to point out, if you look at the certifications, we do have some pretty severe penalties, a lot more, than you would typically see on a tax return that's filed or anything like that. So, you want to make sure you're doing a good faith calculation of all these amounts and that you can accurately do your certification. So that's page 6. And on page 7, you have a list of everything that you're required first up top to submit with your application, and then second on the bottom that you need to maintain, but you're not required to submit with your application. I'm not going to go over all these individually. It's a lot of the things that we expected to be there, as far as bank statements, canceled checks, payroll tax filings, documentation of your FTE calculations, and things like that. The last thing I want to mention on this front is this is what the SBA is requiring. There's a chance that your lender could require more than that. So it would be a good idea to check with your lender. I would maybe give them a copy of the sheet and ask if there's anything else that the bank itself is going to require that you either submit with your forgiveness application. So that's the overview of the forgiveness applications and the instructions. The next thing we want to talk about is that red line document. Let me go ahead and toggle over there. So here is, like I said, it's the document we went over initially as far as uncertainties that we thought would be addressed once more guidance was issued. I'm not going to go over every item here individually. A lot of this stuff has been answered already with what we talked about before, just going over the application. The main thing I wanted to point out, or at least start out with, is what we had listed on our sheet originally that we still are uncertain on and really hasn't been clarified yet. The first thing that falls into that category is, we talked about the safe harbors. If you have a reduction in FTEs or pay rates, but then you later restore them, we didn't know if there was going to be any kind of requirement that you maintain those FTEs or maintain those pay rates for a certain period of time. If you read the bill, if you read the instructions right now, you really just look at June 30th and see whether you did it or not. There's no requirement that you maintain it after that for a certain period of time. That doesn't mean that there won't be one soon. It just means that we don't have one yet. I know there's been speculation that a business could maybe ramp up and rehire for one pay period, or restore pay for one pay period, meet the safe harbor, and then reduce it. We'll see. There's going to be probably more guidance issued on that. It's certainly not the intent of the legislature for someone to do it, and the SBA does monitor, the questions that are submitted and things like that. So that's something that they could possibly address in the future. Again, another item on that front, on the FTE count front, is, are there going to be rules against hiring related parties to boost your FTE count? In the tax world, there's a whole lot of rules that pertain to related parties. We don't have any of those yet on the PPP laws. Again, that doesn't mean that there won't be any eventually. Probably not, within the intent of the legislation for that. Now you could have an instance where, you legitimately do hire a related party and they all are working, and they may be able to count for you, but they may not. Another item we had that's still uncertain is, will prepayments of rents or leases be able to count towards the application? The bill, the instructions definitely specifically say that prepayments of mortgage interest will not qualify. It's silent on rent in the very next line. Is that just an oversight, or does that mean anything? We don't know that yet. Another item is transportation. That's a very common question that people have. Transportation is defined as a utility, but what exactly does transportation mean? And what we know, at least from the FAQs, is that your gasoline paid on a business vehicle is definitely going to count as transportation. And we now know, like we talked about before, that a lease on a business automobile isn't transportation, but it is rent. So you can get that. There's some other things that could fall within that transportation definition, like mileage reimbursement, insurance, maintenance, things like that. But we don't know whether or not they're going to be classified as transportation. So waiting on more guidance on that. Another item is self-rentals. As of right now, there are no rules against or prohibiting, rent that's paid to an owner of a business, on a legitimate lease to qualify as a forgivable expense. I guess no news is good news on that front. So unless they come out and say that those do not qualify, I would plan on them qualifying. The final item I want to talk about where we still need guidance is interest paid on lines of credit. Again, this remains, like we talked about earlier, a line of credit is not secured by real or personal property. Therefore, it does not fall into the definition of a mortgage. So those payments on lines of credit for a business still remain ineligible for forgiveness. The next piece of expenses I want to talk about now is, what do we need more guidance on? And we talked about the first two already. These are probably the two main considerations that people are waiting on. That is the paid or incurred issue, for the things that were incurred prior to the 8-week window, payroll specifically, that's paid during the 8-week window, in the very beginning. Also, the owner's health insurance or retirement plan contributions, do they count at all? And is a owner of a partnership treated any differently than an owner from an S Corp? I expect that's going to be clarified hopefully soon in some frequently asked questions or regulations. And then also, too, on the compensation front, we would like to see more FAQs or guidance issued as far as retirement plan contributions. As far as, you could have 2019 retirement plan contributions paid in the forgiveness window, and then also, a payment towards your 2020 retirement plan expenses. So are they both going to qualify, or do you have to prorate payments or things like that? We're hoping we get more guidance on that. And then on the same front, as far as employee bonuses or incentive compensation, do you count 100% of a bonus, or do you have to prorate it? So those are the things that we certainly hope to get more guidance on now. And then finally, on this section, the last thing I want to mention is things that we need to monitor for legislation in the future. And this is heating up certainly in the last, I would say, week. And that is, first of all, are they going to extend the 8-week forgiveness period, or extend the June 30th date to meet the safe harbors? Also, the cap of other expenses, non-payroll, the 25% cap, that was a rule that the SBA made. That was not included in the bill. It was not passed by Congress. That's what they made up as far as administering the program. A lot of pushback on that. A lot of congressmen, came out and said this is not what we intended. And I know that discussion to legislatively remove that cap has been discussed and may be addressed hopefully soon if they do choose to address it. So you can make the decisions that you need for your business. And finally, the last thing I wanted to conversation side is the deductibility of the expenses that were forgiven. We talked about this as an uncertainty on our last discussion. After that, the IRS expectedly did come out and say, in their view, these expenses, because of a section that already existed in the Revenue Code 265, that these expenses would not be deductible. After that came out, of course, there was a lot of pushback in the business community, and as well as Congress, where the congressmen were saying this is not what we intended, when we said that these forgiveness would be non-taxable. Again, this is something that they can legislatively fix in their bill in a future piece of legislation by altering Section 265. So hopefully we get some good news about that in the future. Hopefully it's the near future, because if you are one of the first participants of the program, you should be about 5 weeks into your forgiveness window. So, you're going to be coming up towards the end of it very soon. So hopefully we get more resolution to some of these items, prior to that. In lieu of that, I think, we just have to kind of make the best decision that you can based off of the information that we have. So there's our red line sheet. The next piece I want to move on to, again, this is a supplement to the cheat sheet that we put out earlier. Your original cheat sheet from the first presentation is still good. You still want to separately track your funds. You still want to, keep all your documentation and all that stuff. But here are some additional things we think you need to consider with this new information that's available. The first item is you want to know what your FTE count is and whether or not you're going to be subject to any limits. And when we get into FTEs, there's a whole lot of different counts you're going to have to do. You've got your covered period FTEs, your alternative payroll period covered FTEs. You've got FTEs at February 15th. You've got FTEs at February 15th through April 26th, that figure into the safe harbor calculation. And then you've got FTEs for your base periods of February 15th through June 30th of 2019, and FTEs for the first 2 months of 2020. So those are 6 different instances where you would have to run an FTE calculation. And then remember, you can either choose the simplified method of 0.5 or the round to the nearest 10th method. So multiply that 6 by 2. Those are 12 different instances where you need to do an FTE count. So that can be very, very cumbersome. Hopefully, if you're using a payroll service, if they haven't already come out with something, they will be soon, where you could just kind of run a report in your payroll software that would give you that calculation. Otherwise, to do it manually is going to be a bit tedious and time consuming. But if it's going to be a factor that could significantly impact your forgiveness, you're going to want to know about it, hopefully beforehand, before your forgiveness window is up. Second, if the FTE count is going to be an issue for you, we discussed the 4 different ways you can turn a fractional FTE into 1, as far as making an offer to rehire or documenting instances where someone was laid off. Voluntarily terminated employment or asked for reduced hours. Make sure you have all your ducks in a row on that as far as your documentation goes. Number 3, we want to talk about the safe harbors that we mentioned before, the 2 that we definitely know of. I've got a note here of a possibility of a second safe harbor. If you look at the application itself on the FTE safe harbor list, it says if you have not reduced the number of employees or the average hours paid of your employees between January 1, 2020 and the end of the covered period, then you've met a safe harbor. This came way out of left field. This was never mentioned in any part of the CARES Act bill, previous guidance. It's not mentioned in the instructions either. So is the SBA creating a second safe harbor, or is this just a typo? I suspect it's just a typo, but until we get that confirmed, it's out there. So you got your first FTE safe harbor, which we list right here, as far as February 15th to April 26th. That's what we expected. And then this other one, which we'll see about that one. The fourth item is what we talked about earlier. If you have a PPP loan in excess of $2 million with your affiliates, you're going to be automatically audited or reviewed. So prepare your application accordingly. You probably want to certainly consult with accountants, attorneys that you have, because going into it that it will be reviewed. So try to make sure you have everything, all your ducks in a row on the front end. And certainly too, remember, you're not presumed to automatically meet the certification of needing the loan to support your ongoing operations. That's something, if I had a loan over $2 million, I would certainly consult with my attorney to make sure we had all the best documentation we have to support our argument on that. So not a consideration for everyone, but if it is for you, then it's a big one. So make sure you are giving that adequate attention. Number 5, if you are a weekly or bi-weekly payroll payer, you do have the option to use the normal covered period or the alternative covered period for payroll. And you want to look at that and see which one would be most beneficial for you. And then finally, the last item we have is certainly continue to monitor SBA guidance as it comes out and the status of future legislation. We're going to help you with that. We're going to keep on doing that. And as more details come out, we're going to get that information to you.